Okay, imagine this. A massive global crisis explodes over a weekend. You've got missiles flying, international threats, but the stock market, it's closed. What happens when the entire world needs to price risk, but Wall Street is completely dark? That's exactly the story we're going to unpack today. So, picture it. It's a Saturday. The world is holding its breath, tensions are just boiling over in the Middle East, and you just know that markets are about to go completely haywire.
But here's the huge problem. Traders are absolutely scrambling to manage their risk. But the traditional markets, New York, London, Tokyo, they're all shut down for the weekend. So what happens when huge global events don't care about a 9-to-5 schedule? Where does all that financial energy actually go?
All right, let's dive into the specific crisis that played out entirely after the closing bell rang on Friday.
Over just one weekend, the situation completely spiraled. First, the US and Israel reportedly hit targets in Iran. Then, Iran fires back, launching missiles across the region and threatening even more attacks. And then, to top it all off, President Trump gets on social media and calls for the Iranian people to overthrow their own government. You can just feel the panic building in the financial world.
So with the old school markets totally silent, where did all of this financial pressure go? Well, the answer wasn't on Wall Street. It was happening in the digital world, on a whole new kind of trading floor that never, ever closes.
Yep, the answer wasn't on Wall Street at all. It was on-chain, which is just a fancy way of saying it was all happening directly on a blockchain through crypto exchanges like Hyperliquid.
And the reaction was instant. Traders, desperate to hedge against all this chaos, they piled into crypto derivatives that track real-world assets. On this one exchange, Hyperliquid, oil futures jumped 5%, silver shot up 2%, and gold climbed over 1.3%. This was real-time price discovery happening while the traditional markets were completely asleep.
And listen, we are not talking about a few small-time traders here. The trading volume for silver contracts alone hit a jaw-dropping $227 million in just 24 hours.
And right behind it, gold contracts saw another $173 million change hands. These are really serious numbers, proving this was a legitimate place for traders to go and manage their risk when every other door was locked shut.
So how is any of this even possible? Well, it all comes down to a really clever crypto-native innovation. Let's break down how these things called Perps actually work.
So Perps, which is just short for perpetual swaps, the easiest way to think about them is like a futures contract, but with one crucial game-changing difference. They never expire. They are a financial tool literally born and bred for the always-on world of crypto.
Okay, here's the side-by-side. Traditional futures? They have a set expiration date, and they only trade during market hours. But Perps? They never expire, and they trade 24/7, 365 days a year. This is a huge deal, because it lets traders hold their positions continuously, without having to deal with the slow, clunky settlement systems of traditional finance. It's really a fundamental upgrade.
So, this crazy weekend, it wasn't just a fluke. A lot of experts are now pointing to it as stone-cold proof that our markets are due for a serious upgrade to handle the modern world.
Jake Ostrovskis from Wintermute just nails it. He says the fact that Bitcoin basically had to become a stand-in for all global risk just because it was the only market open is the exact reason why more assets need to be tradable 24/7. Why use a proxy when you could just trade the real thing?
And Anane Kapila, who founded a new 24/7 exchange, is even more blunt about it. He calls this event a kick in the face to all the skeptics. In today's hyper-connected world, he argues, price action truly never sleeps.
So the big takeaway here really isn't just for crypto people. This is about a fundamental upgrade for all financial markets. The folks who support this argue that continuous 24/7 price discovery is just plain more efficient. It leads to fairer prices and way less risk for everybody when a crisis hits.
So where does all of this lead? Well, let's connect this one wild weekend to a much, much bigger trend that could totally reshape finance as we know it. The future, as they say, is tokenized.
Tokenization is the magic word here. And it's actually a pretty simple concept. It's just the process of taking a traditional asset, we're talking stocks, bonds, even real estate, and creating a digital version of it on a blockchain. This is the key that could unlock 24/7 trading for pretty much everything. And you can sort of see the logical path forward from here. It starts with moments just like this weekend, where crypto perps prove that the 24/7 concept really works. Then, that proof of concept encourages the big institutions to get serious about tokenization. And the final step?
The traditional assets themselves start moving onto blockchains, making them tradable anytime, anywhere.
But of course, it's not quite that simple. This all leads us to the real billion-dollar question. Is Wall Street actually ready for this?
Because the biggest hurdle here isn't convincing people that 24/7 trading is a good idea. The real challenge is the infrastructure, the actual plumbing of the financial system.
And that right there is the key question that nobody has a definitive answer to yet. Sure, the trading volumes we saw on Hyperliquid were impressive for a crypto venue, but they're still just a tiny fraction of what traditional markets handle. So, can this on-chain plumbing really support the full weight of the global financial system at an institutional scale? That's the big unknown.
So that leaves us with this final thought to chew on. Was this weekend a true turning point, the beginning of the end for 9-to-5 markets? Or was it just a fascinating stress test, a fleeting glimpse of one possible future? The jury's still out,